If someone told you that you can get $100,000 in insurance coverage for just $2.50 a month, would you believe it? That's exactly what the MINDEF and MHA Group Insurance claims to offer. It sounds like a dream, but is it really as good as it looks on paper? Let's break it down and find out. In this video, I'll walk you through what the MINDEF MHA Group Insurance covers, how much it costs, who's eligible, and the pros and cons, so you can decide if it's a good fit for your insurance portfolio. Hi, I'm Fer from Dollar Bureau, a personal finance platform that talks about insurance, investments, and financial planning. Now, to make it easier for myself in this video, I'm going to call this the MINDEF plan because saying MINDEF MHA Group Insurance Plan is a mouthful. So firstly, what is the MINDEF Insurance Plan? If you've been through national service, you've probably heard of this policy. The MINDEF plan is essentially a specially offered group insurance plan to folks in the SAF, SBF, SCDF, and related agencies. It offers term life insurance, critical illness coverage, early CI coverage, personal accident insurance, and even two lesser known types of coverage, disability income and outpatient treatments, which I will cover more later in this video. So, let me debunk a myth. Who can purchase the MINDEF Group Insurance Plan? Now, before you scroll away because you think that this policy can only be purchased by NSFs and regulars, stop because I have good news. If you're a member of SAF, SPF, SCDF, or any related agencies, you are in. That includes NSFs, NSmen, regulars, public officers working with MINDEF or MHA, and even volunteers like the SAF Volunteer Corps. Yes, that means even if you have ORD'd and you are still completing your reservist cycles, you can qualify to purchase the MINDEF policy. Oh, you can also purchase them for your spouse and your children up to age 25. So, how does the MINDEF group plan work? Well, there are two schemes you need to know about. First is the core scheme, which gives national servicemen, regulars, and volunteers up to $300,000 of term life coverage, fully funded by the MINDEF or MHA. Then there's the voluntary scheme where you can customize your own protection. You can get up to $1 million in life or personal accident coverage and up to $500K in critical illness or early CI coverage. Even better, your dependents can also be covered too. And yes, coverage continues even after you leave service all the way until you turn 70 as long as you keep paying. This video will talk about the voluntary scheme, which, if you don't know yet, provides affordable coverage at a fraction of the cost of what private insurers charge you. Firstly, let's look at what the group term life plan offers. You can get coverage for death, TPD, and terminal illness from $10,000 all the way up to $1 million in multiples of 10. Premiums stay leveled until you hit 65 and then they start climbing every year until 70. You do not need medical underwriting if you apply for up to $300,000 in coverage, a big plus if you have existing health conditions. The next question is, how much does the term coverage cost? Let's say you want $100,000 in coverage. That will start you at about $2.50 a month. For $500K coverage, that's about $12.50 a month. And for $1 million in coverage, it's about $25 a month. To say that it's pretty affordable would be an understatement. Also keep in mind, while premiums are said to be leveled, the insurer can still revise them since it's a group policy. I'll talk more about this later. Next is the personal accident plan, or what they call it, the group personal injury. It is just as flexible as the term plan. Just like a term plan, it is a base plan, which means that you can add riders on top of it to enhance your coverage. You can get covered from $10,000 up to $1 million in multiples of 10. You'll get 100% payout if death was due to an accident and 150% if the accident causes TPD. I've also included the specific TPD payouts here, so pause the video to read. There's also coverage for permanent dismemberment, fractures, ambulance costs, mobility aids, and even home rehab. You'll also find benefits like child education funding, comatose state payouts, and compassionate death allowance, which is a rare find at this price point. Take note that if you have more than $200,000 in coverage, upon a successful claim, you will get paid up to $200,000 upfront, and the remainder will be paid out in 3 equal installments. So let's say if you have a $500,000 coverage, 200K will be paid first, and then 100K will be paid out in 3 separate payouts. But how much does the PA coverage cost? 100K starts at 50 cents a month. It's 50 cents a month. 500K coverage starts at $250 a month. $1 million of personal accident plan just costs $60, and all of this are before GST. That is significantly cheaper than many standalone personal accident plans on the market. While the premiums aren't level, they are still unlikely to get more expensive than private options. Here comes the part where you can enhance your plan with riders. You've got 4 riders to choose from: critical illness, early CI, disability income, and outpatient Medicare. You will need either the term life or personal accident plan as a base before adding these. And yes, you can extend these riders to your spouse and children too. First up is the group living care, the CI rider. This rider covers 37 advanced stage conditions like cancer, stroke, and heart attack. It is non-accelerated, which means it won't affect your base life or TPD coverage when you make a claim. You can get up to $500,000 in coverage, and it pays out in one lump sum. So, if you have 500K of term plan as your base and purchase another 500K in CI rider, upon a successful CI claim, you get 500K paid out from the CI rider, and you maintain the 500K from your term plan. Just note that your rider sum assured can't exceed your base plan's coverage. It has to be the same coverage or lower than your base plan. So, if you have 300K in term life coverage, you can only get up to 300K of CI coverage, not the 500K limit. The minimum sum assured starts at 50K and it goes up in multiples of 50 up to 500,000. And the CI rider is also very affordable until age 65, which after that costs rise sharply. You can pause the video to read the pricing table. Oh, like all CI plans, there's also a 90-day waiting period plus a 30-day survival period before you can claim. Next is the Group Living Care Plus, which is for the early stage CI. But there's only 10 conditions covered. These are the 10 ECI conditions covered, so pause the video. I've also included a link to the specific definitions in the description below, so be sure to check it out. You can get covered for up to $500,000 if you're below 56, or $200,000 if you are older. Coverage starts at 50K in multiples of 50K, and it is also non-accelerated, which is great. Similarly, the sum assured for this has to be equal or lower than your base plan. Premium starts at $1.05 a month for 50K coverage for those 20 and below. Here's the premium table for men, and here's the premium table for women. The ECI rider has a 60-day waiting period with a 30-day survival clause, similar to private ECI policies. But compared to private ECI plan, this is definitely less comprehensive, but still good for those on a tight budget. I'll share my overall thoughts on this policy at the end of this video. Next is the Group Disability Income Rider. If you are unable to work due to a disability, this rider pays you a monthly income. The payout is based on half your monthly salary, capped at $120,000 a year. This means that as long as you are earning below $20,000 a month, you won't hit the cap. Coverage is offered up to 70 and it's worldwide. There's a 6-month waiting period before the payouts begin, but once it kicks in, your monthly income increases by 3% a year. If you are overseas during these payouts, the policy will only pay you for up to 6 months. And also take note that if you decide to go back to work at any job, the payouts will be prorated. Here's the formula used to calculate the adjusted payout. Here's how much the Group Disability Income Rider will cost you in addition to your base plan. Assuming you earn $5,000 a month, your yearly coverage would be $30,000. You take $5,000, divide it by 2 since that's the limit, and then multiply it by 12 months. Thus, if you're under 26, your monthly premiums would be about $10.05. Here's the formula you can use. Oh, you'll need to get medical underwriting to get this, and if your salary increases, don't forget to update your coverage. Otherwise, your payouts are stuck based on your old salary at the time of application. Lastly, you have the Outpatient Medicare rider. This is an unknown secret that many don't even know about, even me, until I took a closer look at this policy a few years back. Firstly, unlike the others, this one can't be bought online. You'll need to email a form directly to the insurer's team, and it's handled through a vendor, not the insurer directly. There are two plans. Plan A with a $1,000 annual limit and Plan B with a $500 annual limit, covering GP visits, specialists, x-rays, lab tests, and even overseas emergencies. Meeting their panel GPs and specialists are as such, while non-panel GPs and specialists are capped at a $30 and $100 respectively. There's also a $10 co-payment per visit. Here is the full table. And here's how much the Medicare rider costs. If you are a freelancer or self-employed, which means you probably don't have outpatient benefits offered by your company, this rider helps cover common outpatient costs without you having to fork out of pocket each time. Now, how do you apply for the MINDEF plan? To apply for the main group insurance plan, head to the insurer's website, currently Singlife, and click Get a Quote. I've included the link in the description below. All you have to do is fill in your details, choose your coverage, and then make payment online. But if you want the outpatient rider, you'll need to manually fill out a form and email it to the MINDEF or MHA's insurance inbox. They'll follow up with the next steps. I've added the step-by-step instructions for this in our blog post, so check it out in the description below. Next, how do you nominate a beneficiary for your MINDEF policy? This part is pretty important. You can nominate someone to receive the payout from your death benefits, and you should to avoid any delays. Without a nomination or a will, your family will need to apply for letters of administrations, which could take years. Even with no nomination, the insurer will only pay up to $150,000 as a safeguard, but it's still better to have it sorted in advance. All you have to do is download the nomination form, fill it up, and submit to the insurer. I've included the nomination form in the description below. Now, let's cover the advantages of the MINDEF plan, followed by the disadvantages after. There's really a lot to like about this plan. The premiums are extremely low, especially when you are younger. There is no medical underwriting needed for life cover up to $300,000, huge if you have medical conditions. And let's not forget that you can cover your spouse and kids under the same plan. The CI rider is cheap compared to private CI plans, almost half the price in some cases, and it's one of the few group insurance plans that lets you buy and forget, no need to worry every time you switch jobs. You'll also get access to exclusive discounts on the insurance products like travel and car insurance. But there are trade-offs too. Premiums spike after 65 and get really expensive by 70. The early CI rider is limited, which only covers 10 conditions and not as comprehensive as other plans. There's also no agent to assist with claims. So if you're unwell, everything is DIY, such as your forms, your timelines, your paperwork. Coverage also ends at 70. That's okay for some, but if you're a bit more kiasi like myself, you may want a longer term coverage. There are also payout limits. If your coverage is $1 million, you'll only get $200,000 upfront and the rest is staggered over 3 years. And lastly, it is not convertible, so you can't change it into a whole life plan or a savings plan down the road should you want to. Something that private term plans offer. So, what do I think about this policy? Here's my opinion. If you are below 65, the value for money is hard to beat. You're getting serious coverage for really minimum premiums. But once you cross that 65 mark, prices increases dramatically. At that point, unless you don't have any other insurance, it probably doesn't make sense to keep it. I also think the group term life and personal accident plans are straightforward and of great value. The CI rider is decent if you're on a budget, but the early CI rider, that one needs improvement. 10 conditions isn't a lot, especially when private plans offer 100 conditions or more. I would probably look for an ECI plan through a private insurer. As for the disability income and outpatient care, I think they're pretty helpful if you are self-employed without any company benefits. So, should you get this plan? If you are on a budget or just starting out, absolutely. If you're using it to supplement your existing coverage, I think it's a solid low-cost way to top up temporarily. But if you want more flexibility or you are approaching retirement, it's probably time to review your options. If you want to learn more about the MINDEF MHA insurance plan and how it fits into your overall insurance portfolio, you can speak with one of our financial advisors and get financial advice from them. They'll help analyze your needs, your coverage, and make recommendations tailored to your specific needs. Best part, it's free. I'll include the link in the description below. If you enjoyed this video, don't forget to like, share, and subscribe for more practical financial tips. Thanks for watching, and I'll see you in the next video.